A proposed 50% US import duty on copper could disrupt Australia's role as a major exporter and ripple right across the Asia-Pacific economy. Joining me now to tell us more about this is Hersh Oberoi from the team at Balfour Capital. It's good to have you with me, my friend. How could this copper tariff trigger volatility in Australia's mining sector? Let's start there.
Thanks for having me here, Mike. I'll try to compartmentalize this in three ways. So first, let's look at it from a global perspective. From a global perspective, copper is critical to every economy.
It's in everything.
Everything, from EVs to infrastructure to data centers, you name it.
Huge.
And a 50% tariff on copper is substantial, escalation. We saw this sort of, protectionist pivot back in 2002 under, President Bush's administration, when he put tariffs on steel. Having said that, this, impacts not just the producers, but, jobs as well. And we'll see, the producers' margins compressing, supply chain disruptions, and a weaker sentiment in the market.
Yeah, it's tightening the belt in many, many, many ways.
Yeah.
But what impact might this have on the Australian dollar and terms of trade, if we can turn our attention to that for a moment?
Absolutely. So copper, is a player in the, Australian currency basket.
Yeah.
So we are a commodity currency.
Yes, I'm with you.
And, we've seen weakness in the iron ore exports, and declining construction activity in China. So that's already, having its effect on the dollar. With the 50% proposed tariff, copper makes up about like 0.6% of the GDP of our exports, which is roughly about 5 to 6 billion. We'll probably see the weakening of the AUD against the USD. From the books, I can already see CFTC's shorts building up against the AUD, and it can erode and get to a range of about 62 to 63 cents to a dollar.
And we don't see the impacts of this fully until time goes by and it all sort of settles in.
And with the dollar weakening, we'll probably see funds flow out of the Australian economy.
Yes, yeah.
Foreign funds flowing out of the ASX miners. So that'll have an impact.
Okay, so with all of that in mind, do you think restricted access to the US markets will lead to job cuts and, of course, less investment in the space? It seems obvious, but there's more to it. There's always nuance.
Absolutely. There's a broader ecosystem to the copper sector. We might see job cuts around logistics, engineering, production, etc. We've got about 24,000 jobs in the copper sector. And they're mostly concentrated around South Australia and Western Australia.
Of course.
And we might see, defer hiring processes, cutting of contractors, and pauses on exploration of copper. It's a threefold thing, Okay. There's, of course, employment risk that I've already covered. Then there's investment risk. There's about $2 to $3, billion in the pipeline, again, for CapEx, which is going to have a risk exposure. And it's going to have a services spillover effect on companies like, Worley and Perenti. Worley is engineering company, and Perenti is a drilling company. So we might see softening of the prices on the ASX. However, if these tariffs are enacted, we'll see a re-rating of risk premia on copper-linked debt issuers. And we'll see a pullback of the ESG capital, rotating out of copper because, copper was responsible for the, green demand narrative.
Of course.
And might see a political blowback, since especially in the regions which are reliant on mining, royalties.
Yeah, it's certainly difficult times, but we don't have a crystal ball. It seems like we're in a fork in the road. Hersh, I know you and the team at Balfour Capital keep a close eye on all of this.
Yes.
Where's the best place to go and help keep an eye on it with you?
Well, go onto our site, Balfour Capital Group, .com, and you'll get a lot of material about the economies, how everything interacts with each other, what are the correlations, and what our outlook for FY25 is.
We'll keep a close eye on it. And again,
Yes.
thank you for joining us on the
Thank
program.
you so much, Mike. Pleasure to meet you.